Hello everyone, welcome to your weekly on-chain review. This is your host Sky and today is 18th of August 2022. Let's go ahead and look at some important on-chain metrics. First we have is the short-term holders SOPR. Last week we saw that short-term holders SOPR was approaching 1. It was at 1.01 last week. Right now it is coming down and it has come to 1. So we also understood that in a bear market this one zone acts as resistance. So we have seen here whenever it approaches 1 it has acted as a resistance, whenever here, then also here, and in a bull market this level acts as support. So you see that this is the light line is the current SOPR and this dark purple line is the 30-day moving average of the SOPR. So you see when it starts evolving above 1, we see a rally in the Bitcoin price also. That's what we are expecting here. But being a bear market, this is a resistance zone, and you can see in this also the first time it approached this zone it was rejected, and here also. So you see current day SOPR, even if it evolves 1, we need a sustained rally where it stays above 1. Here we saw a wick, we saw increase in price, but see the 30-day moving average, it never crossed it, and we saw a rejection. So we need to see how it evolves in the coming days. This signifies that the short-term holders are at a break-even price right now, and it is a good zone for them to get out of their positions. So we can expect some selling. Same is the case with adjusted SOPR. Adjusted SOPR actually touched 1, and when Bitcoin price reached 25k and it was rejected, and now it is at 0.99. There is still some room to go on the moving average, and we can see that there is a likelihood that it can get rejected, and hence whatever buys which were made here by the short-term holders, they are taking profits on them, or they are being break even at 1 and getting out of their positions. This is the long-term holders SOPR, and long-term holders SOPR, we have seen that long-term holders are experiencing losses. On the previous week their value was at 0.59. Today it is at 0.51. So it spiked above 1 when the price went to 25k and was rejected from there. It means that here long-term holders they got out of their positions, and right now they are at a loss, the ones who didn't sell. And we also saw that this is an area of value for long term, but for mid and short term we cannot hold on to this. And we have seen in previous bear market bottoms that we have stayed in this zone for quite a while, for a year or so, and here we have only stayed in this zone for 80 days. You can see the previous bull market, how it in 2011 it stayed here in the zone for 180 days. In 2016 it stayed here in this zone for more than a year. So you can see even if the bottom is in, then also there is a lot of sideways, and there is time for the new bull market to emerge if you look at this metric alone. So you can see that this is for a long term, for 3 to 4 years. This is a good accumulation zone. Next we have is the market value to realized value. MVRV did not approach the lowest region till now, which is 0.73 region, 0.7 region, and it actually bounced from the corona drop level, and right now it is flattening a little, and you can see right now it is at 1.07. This is an area of value below this line. This is an area of value for long term. This is the PUELL multiple, and PUELL multiple, we have seen PUELL multiple to go, this is the extreme zone which is at 0.33. It reached to this zone, and now it is at 0.51. Last week it was at 0.59, and we have seen some miners selling at 25k. I will show the reserves and how they have fallen in the upcoming charts, and what we are seeing is that we are facing resistance here at 0.6 level, and miners have been selling at this zone. That's why we see a dip in PUELL multiple also. This is the NUPL, and NUPL is bouncing off from the capitulation zone, but now it is turning back again, and we have to see it has not reached the level we saw in 2018 bear market, the extreme level where the bottom was formed, where maximum number of the participants in the market were at a loss. This time the loss was similar to the loss which we saw at Corona level drop, but it didn't reach its peak loss for the maximum number of participants. Next we have is the funding. Funding has been positive in the past 2 weeks, which is not a good sign, and when funding is positive, it means that longs are paying shorts for their positions to remain open. And what we have seen in funding is that whenever it has reached this level at 0.01 level, we have seen a rejection. So it is a peculiar thing for the bear market, that it cannot sustain positive funding. And when it comes to a bull market rally, we see that rallies are sustained even with very high funding, because it should be costly for you to hold on to your leveraged long positions if the price has to go up. In a bear market, the price cannot sustain it, and the price gets rejected, and right now it is just getting rejected of this range of 0.01. As soon as it gets a little high, it affects the price to the downside. Right now it is positive also, and currently in today's funding it has become neutral after the rejection. This is the open interest. Open interest has been rising while the price has been falling, which is not a good sign. We have seen that this market has been fueled by Ethereum and a lot of inflows to derivative exchanges. And in the last on-chain video also, we made it very clear that rallies which are supported by derivative exchanges, or the rallies which are headed by Ethereum, those rallies are not that strong as compared to spot driven rallies and as compared to rallies which are spearheaded by Bitcoin. So that's why the confidence in this rally is less. And what we can see is that there hasn't been much spot buying, but the sentiment has changed, and there were calls last week of the new bull market and resumption of the new bull market, which is also a worrisome sentiment for bulls. We are at resistance right now. We are at resistance of SOPR. We are at resistance in price, realized price also of 24k, and that level we can also see that this is the leverage, and leverage is at its all-time high. This also couples and gives more proof that this rally has been spearheaded by derivative exchanges and futures market, and leveraged. A lot of leveraged longs have opened up. So this is not healthy. All-time high leverage is not healthy. It will wind down. Whenever it has gone very high, it has come down, and normally it leads to a correction in price. Next we have is the fear and greed index. So last week we saw the fear and greed index was at 42, and today the fear has increased. It is at 30, and after the drop more fear has come in, and it has also, you can see in this chart, we were here in fear and greed, and then it fell with the drop. Last week we also saw that though the price was rising, the number of active addresses were actually declining and not or staying neutral sideways, which is also not a healthy sign. So what we have seen is a Bitcoin rally is not there. Ascent S&P also rallied, Nasdaq rallied in the past week, but we saw that Bitcoin price didn't go up with the traditional markets, which is also a worrisome sign, and it just shows the weakness of the market right now. So we will wait for these resistances to flip. Until they are flipped, we are neutral in this zone. And if you are holding spot longs from below, from 18k or 19k, this area can be a good area to hedge your longs. If you are uncomfortable with hedging, then of course you can always sit in stable coins and wait for the resistances to flip on a higher time frame, not on daily. It can just be a wick. So see if the weekly and 3-day time frame the resistance is flipped, that will be an indication for you to enter, or you sit in stable coins. So we have already seen that August can be neutral month. It can totally go down the price, and the gains can be very limited. And September is a worrisome month, and a lot of news events are happening in September, like merge and Mt. Gox and everything. So it is better for me. It is a red flag and not a great time to be trading. We could be here in seasonality. We mentioned it last time also. We could be here, but chances are we can be here sideways, and we are just do sideways for some time and then drop. This can be something which can play out, because it has been playing out till now. So last week we also saw this inflows which I was talking about. These inflows were on the derivative exchanges, so which is not a healthy sign. If they are spot buying, that is a healthy sign, but this is something which is worrisome, because people can use their bitcoins or stable coins also on derivative exchanges to short the market. This is the reserves of the miners. So we saw a lot of miners selling at 25k. This is the reserves which are falling, which means that the miners have been taking out their funds from the markets, selling their positions and taking out the funds. So this is the drop we saw. First capitulation time we also saw them selling heavy. Now in the rise in price also we saw them selling heavy. It shows that they don't have much confidence in the market, this move. So we have seen this is a realized price. This 24,700 is the zone of resistance. Support zone is 22,500 area also, and the electricity production cost at 20,500, and of course the lows. So we have seen that S&P has rallied and Nasdaq has rallied, but Bitcoin didn't show any signs of strength during these rallies, and there's an inverse correlation that DXY, it also, if the market had strength, it should have been rejected from here, which we were expecting, but it didn't reject, and it has continued to the upside. And it means that the market is not in a very healthy condition for Bitcoin. And S&P 500, if it is not going up with S&P 500, when it falls, then it might have a direct relation, and Bitcoin can show more weakness, being a weak asset. So you can see that the RSI is going down. Here the divergence is there on S&P, divergence is there on Nasdaq also. So it is time to just be cautious at resistance and wait for the market to reveal its hands even more. So yeah, this is the Bitcoin halving cycles. So you see that even after the bear market, the new bull market starts after the halving. See here in 2012 it started just after the halving. It was very close to the halving. In 2016 it was a little further away compared to 2012, and we saw after the halving it continued. And here also we saw that after the halving we saw the bull run. So the next halving now is 600 days away, and it's 2 years away, and resumption of the new bull market happens usually in this decade-long chart. It has happened only after the halving. So it is 600 days after the halving, but so we have a lot of time right now. And what we see is that before the halving there is a lot of sideways, and we may have put the bottom. So see this, we put the bottom much before the halving, and to be exact it's 620 days before the halving. So it could be the fact that this is the bottom, but even in case this is the bottom, we can surely go sideways for many days and retest the lows. So which has happened here also. See here we put the bottom here and then we revisited it, during the corona drop, close to it, and here also the same thing happened. So we are expecting to play at this rally, the bear market rally, which might not put a all-time high. So this is what we are expecting to play, but right now we are at resistance, so resumption of the rally we can wait for that when the resistance flips. So on total 2 also we were looking at this chart, and this is the RSI on the daily, and it has rejected this trend line, has posed a significant resistance on total 2, and again this is the last week's chart, and again we saw the rejection from here. So this is the zone where we are seeing rejection. So this is another resistance. It shows that, so many charts are showing that we are at resistance, and we can wait till it is flipped. So that is all for today, guys, and I'll leave you with some good psychological alpha, and you can stop and read this. And this is the most important thing in trading, is the mindset. It is more important than even the skills or any technical indicators or knowledge of technical analysis you can achieve. So strengthen your mind, and all the best for your trading. Please come back again next week, and thank you very much for watching this video till the end.